So we come to our last session for the summit. As we know, and we discussed this a little bit more last time, that our best estimates at the moment are that probably at least 70% of the people in Muslim countries as a whole have no access to financial services. 30% have access of one kind or another. And therefore, when we are talking about Islamic finance, Takaful, whatever we have, we are only addressing that 30%, because if you have no access to financial services, it's very difficult to claim that you are going to service them. So the first question we started to look at last time was to see how to create financial inclusion to enable financial access and therefore then development of products which will suit that market. Now, one of the interesting things which has happened in some countries, I think Iran and Egypt to some extent has tried, and India has tried in some of the things, is, as you know, in many countries over a period of time, you have a buildup of subsidies, whether for basic staples or fuel or whatever. And over a period of time, these subsidies become quite large, and you have billions of dollars of budgets just devoted to subsidies. What Iran has done with the help of the IMF at that time, about 5 years ago, is that it decided to monetize those subsidies. And that time it came to the conclusion that perhaps subsidy per head was about $45 a year. So they said, we are going to remove these subsidies, but give you cash, each person cash of $45. The condition of receiving this cash would be that you should have a bank account. So creating a kind of financial inclusion, everybody will run to have $45 into their account. And I think that would probably mean that at present, you might have a financial inclusion rate in Iran of close or over 90%, which is very, very good for a country of that level of development and so on. India has tried with this model in some of the states, and it is showing similar results. Other countries like Egypt and Nigeria looked at it, but couldn't try it because of vested interest, because their subsidies were mostly captured by smugglers. So fuel subsidies captured by smugglers, and those are big interests, and they wouldn't allow you to change the law if their livelihood is threatened. But at some stage, they will have to tackle this. However, there are other ways of creating financial inclusion, albeit as a slower pace, and that's routes through using technology and other things. So what we want to do in this session is two things. One is to look at this whole question of addressing that 70%, and secondly, see how the Takaful can be used, and particularly in many cases, how micro-Takaful can be used to address this question as well. So what I want to do first is to say, if I can ask Mr. Muhammad Zubair, who is from the AlHuda Center, to make a presentation on some of these aspects, and then we will move to Zainal, and then finally, I promised Alberto to put him some searching questions to enlighten us as well.
Thank you very much to give me an opportunity to talk about micro-Takaful. This is the area for which I am very much passionate. I will start my presentation with some foundations of micro-Takaful, that why we need micro-Takaful. As you know, interest is prohibited in all the divine religions, not only in Islam. even interest rates prohibited in Hinduism, Judaism, and other religion as well. But Islam have very strict verdict about it. Therefore, Muslim people feel hesitate to utilize interest-based financial product or insurance product and remain excluded from the financial access. So if we want to include them into the financial inclusion, then we have to have designed such product which are according to their religious and social beliefs. So if in many Muslim countries people hesitate to utilize insurance or micro-insurance, so micro-takaful will be the tool for financial inclusion. And if we compare Islam with the other religions, we also come to know that Islam is the only religion in which poverty alleviation is our religious obligation, not social obligation. We have to pay zakat. That is our religious obligation, not social. Sadqa, khairat, the concept of Baitul Mal, all these belong to our religious obligation. But unfortunately, the region in which poverty alleviation is our religious obligation, Muslims are at the high risk of poverty. According to the World Bank figure in last year, October, that about 46% of the world poverty reside into the Muslim world, while Muslim population in the world is about 24 or 25%. We can say half of the world poverty is in Muslim world right now. There are different reasons, political reasons, conflict between the countries, Arab Spring, etc., etc. But one of the major reasons is that Muslim people do not utilize interest-based product and remain excluded from the financial access. According to the United Nations, half of the IDP member countries, which are 57 countries, are carried as the least developed nation in the world. And if we see the global Islamic financial industry, which is about $2 trillion right now, unfortunately among $2 trillion, the share of Islamic microfinance is only 1 billion. According to CGAP, which is the subsidiary of World Bank for poverty alleviation. So according to their figure, the share of Islamic microfinance is only 1 billion, which is less than 1% of total Islamic financial industry. Even the share of micro-takaful within the takaful industry is less than 2%. It means our Islamic financial systems only serving the two halves. What we solution have, don't have. From yesterday we are learning that Islam is the Islamic finance and Islamic insurance is a system of justice, system of humanity. Why? Either poor or not human? Why they are served only 1% and remaining 99% only rich are being served through Islamic banking and takaful industry, which is a very big question mark, by the way, for Islamic financial industry. Yes, for micro takaful we can utilize zakat. Zakat is the main pillar of Islam as well. But zakat cannot be utilized for Islamic microfinance. According to the attribute of zakat, when you have to pay zakat to any poor, you do not have right to take back that zakat money. But we can utilize zakat for micro takaful, because one of the area for utilizing of zakat is health and education as well. So we can design micro takaful product through zakat money for poverty alleviation and social development purposes. And we should also treat micro takaful or takaful as a system which can be utilized or operated by Muslim and non-Muslim. We should not limit it Islamic financial product only for Muslim. Because poverty do not have any religion, but it can be alleviated through certain Islamic religious technique. So we should treat Islamic finance or takaful or Islamic microfinance is a system. For example, I have a mobile and I am utilizing Android system. That system might be made by any non-Muslim, but I am utilizing that system. It cannot affect to my religion. So Islamic finance or takaful should also treat it as a system for poverty alleviation, social development, and other purposes. So in this slide, I want to discuss that what is the poverty treatment in Islam. As I mentioned earlier, that Islam is the only religion where poverty alleviation is our richest application. Islam gives us a specific technique for each segment of poverty. We cannot say he or she is the poor. He or she might be in a specific category of poor. Some poor are extreme poor, chronic poor, transit poor, non-transit poor, and then non-poor. We have a different categories of poverty. If we see conventional finance or conventional microfinance, they have only the product, the interest-based product for poverty alleviation or financing. But if you see Islamic microfinance or Islam gives a solution for each segment of poverty. For example, for extreme or chronic poor, Islam gives us zakat, sadaqah, khairat to address those segments of the poverty. If you pick one poor, for example, if there is a poor, even he or she do not have a shoes on their feet, what type of microfinance you can do with them now? For those segments of society, Islam gives us zakat, sadaqah, khairat, and other donation-based products. When you pick from that level to next level, the transit poor level, then Islam gives us qarz asna, muraba, and some other product to treat the segment of those poverty level. And for the next category, then we have istisna and salam, which is transit and non-transit poor category. And for non-poor category, Islam gives us micro takaful to sustain their life out of the poverty. In Pakistan, we did a survey that what are the reasons that if any Islamic microfinance institution or the generous people of the society gives some donation and some financing to the poor, and he or she was out of the poverty, then why he or she dip again into the poverty? The major reason was the health problem. If there is any health problem on that non-poor category, he will sell out their assets, sell out their livestock, sell out other things and invest into the health issues for himself or for their family, and again dip into the poverty. So we suggest the micro takaful product for health purposes, that if there is any uncertainty in their family, they have to utilize micro takaful product and sustain themselves out of the poverty. And by the way, micro takaful product is for extreme poor as well, fair poor as well, transit poor and non-transit poor as well. So Islam gives us a complete guideline that how to treat the poverty from the society. As per concern about the micro takaful product have a big range. We can categorize for the health, file damage, marriage, livestock. Livestock is another product for the micro takaful at rural area. I belong to a village, a rural area, and I witnessed when their livestock, buffalo and cows, dies. They weep like as we weep in front of our loved one who die. So livestock in a rural area, they also need to be insured to sustain poverty at a rural finance level. Crop loss, created life, endowment, flood, unemployment, term life, education, personal accident, funeral expenses, and rainfall. These are the some products which can be utilized for micro takaful for poverty related issues. Whenever we design micro takaful product, the pricing depends a lot. That what should be priced for micro takaful product. Even in Pakistan, I remember in 2009 and 10, when I was serving to takaful industry, we designed one micro takaful product, and price of that product was only $3. In $3, a family with 3 children and spouse and husband was covered for health, accidental death, accidental injuries, and whatever is the remaining amount, balance amount for the microfinance institution as a credit, it is also paid by the Takaful company. And fifth benefit was related to the some you can say maternity benefit. So in $3, every person is surprised. How can you fulfill, you have a designer product with the $3? Because of the delivery channel. It depends how much simplified delivery channel you have. If you have a complex delivery channel, then your price will be high. For example, the product which we designed for the $3, what we did? We designed that product and give to a microfinance institution who have about 200,000 clients. So what they did, whenever any person will took loan Islamic microfinance from them, then micro takaful will be compulsory for them. So our 200,000 policies sold out in one go to the Islamic microfinance institution, and Islamic microfinance institution give that product to their client. And whenever is any claim, they put their claim to the branch of the microfinance institution. They evaluate the claim and send to the head office of micro takaful company, and we have to settle their amount. So why price was very down? Because of the delivery channel. So there are the different channels, delivery channels for the micro takaful. Like some insurance companies sell out those products through ATM, self-help group. Some of the takaful companies sold out that product through the credit union, insurance agents, and broker, and etc. And what the simplified delivery channel which we discovered and which we utilized to sell out those products to microfinance institution, because microfinance institution have already linkages to the grassroots level. If, for example, if we want to sell that product ourselves, then I might be the price of that product is more than $80 to $90, which we sold out only $3. So the delivery channel of the micro takaful product depends a lot that how can you sell those products. And there are some products in micro takaful, some are very simple and some are very complex, like life insurance, personal accident, livestock and property. These are some simple products, and crop insurance, weather insurance, etc. These are some complex products. So we should also consider that we have to introduce micro takaful product for poverty alleviation and social development. By the way, you are the apex catering of the takaful companies. May I know how many takaful companies have micro takaful product right now in this room, who are sitting in this room? From Sudan? You read takaful, yes. So they are very limited, and I hope so by organizing such forum and including micro takaful topic within the mainstream of the takaful conferences, will increase this concept within the takaful industry. Thank you very much for your patience and listening.
Thank you, Zubair. Of course, you hinted at it, but there is an angle here that if you are able to mitigate the risks of microfinance loans through micro takaful, then microfinance itself becomes more creditworthy. And because defaults on microfinance loans really hinge on life and death strategies. So, for example, if the main recipient of the financing has his only asset, is a bullock or a cow or something, dies, then that loan is immediately in default. If that is taken care of by micro takaful, then the microfinance provider can see financing somebody else, and their finance goes a long way. So these chains of causation need to be also understood if you want to look at the benefits of micro takaful. And we have been trying to work with Sharia scholars to see if zakat can be used in these kind of things as the best leverage which can provide for the upliftment of the poor. There is a little bit of discussion whether this is investment or whether it is immediate need fulfillment or so on, and different schools have slightly different takes on this. But I think overall people are beginning to understand that this is something which is quite useful. Okay, now we can go to Zainal. Although he has been dealing with formal takaful sector, but I think his heart is more in the financial inclusion sector and micro takaful, so I decided to tap his feelings on these subjects. Thank you, Zainal.
Thank you very much, Iqbal. Yes, I had an email on Friday from Iqbal saying, can you also talk about, or take the place of one of the speakers who's not able to make it. So I put together this presentation on the spur because I think that perhaps we need, or the way in which I'm actually making this presentation is to actually learn, if you like, from examples out there in terms of how microinsurance, micro-takaful was implemented. I remember talking to a CEO of a takaful company, and I asked him, are you planning to go into micro-takaful? And his answer sort of took me back a bit. His answer was, I don't believe in making money from the poor. If I were to go into micro-takaful, it's actually for CSR purposes. So that was one CEO's response to, would you like to go into micro-takaful? Before I go into the presentation proper, can I just define micro-takaful as an arrangement whereby you get the insured, if you like, to also contribute towards the cover. The reason I want to make that distinction is because you might have read in the news some weeks ago about a program whereby effectively if you were to utilize airtime on the mobile, you get to actually get some cover, some insurance cover. So in a way, it's an incentive to use more airtime, but it's also another way of paying for insurance in a painless way, all right? So here I'm looking at, having the person who's insured actually being voluntarily paying for that cover. So I will define that as real micro-takaful or micro-insurance. So case studies. Micro-takaful in Indonesia. In 2013-14, the government of Indonesia basically, more appropriately, the regulator, insurance regulator in Indonesia, put together a micro-takaful / micro-insurance program. So you have a choice. You go to micro-insurance or you go to micro-takaful. Of course, Indonesia is a country of a population of 200 million over, which now 85% are Muslims. And a lot of these Muslims live in, if you like, lower income group for lack of definition. So effectively, this product was designed such that it is for those who are earning less than 190 USD a month, 185 USD a month. And the sum cover is pretty basic. Maximum cover of 3,700 USD on death or disability. And the premium is $3.70 per month. Now, of course, being the regulator, they will have imposed conditions in terms of who can sell this, how do you actually do the claims payment. And one of the conditions, of course, is that you must have a license. So you have a special agency license for micro-takaful. Would anyone hazard a guess, after 1 year, how many policies were actually issued under this program? Would you have a guess? Out of a population over 200 million, over 85% are Muslims. Well, we all want to go home, so I'll tell you, less than 200 policies. Now, why? Now, there was a lot of effort that went into making this program, spent by the government to make it, to advertise. Well, I asked, and effectively, there was no support from the takaful industry. Takaful industry look at the product, they look at the profitability, and say, it's not worth my effort. Don't go for it. So what's the lesson that you learn from this? Well, the lesson that you learn from this effectively is that you cannot basically design a Takaful product without bringing in, if you like, the industry. They have their own objective. They are there to make profit. If they see that the profitability of the product is minimal, no? In Indonesia, there's still a big market out there for Takaful, for insurance, for which they can make profit. So why use that effort to go into micro Takaful? I remember talking to the CEO of, I think it was Allianz in Indonesia. He was making a presentation. He said that he went to Germany to present his board of directors and asked his board of directors for permission to sell micro insurance or micro Takaful in Indonesia with a lower return on equity. Because he's got to justify all his products. So he went to Germany and asked for permission. Can I sell this micro Takaful product, but at a lower return on equity than the other products I'm selling? The board of directors says, go ahead, right? So the point here I'm trying to make is that, insurance companies, Takaful companies, because the fact that they're there, to make money, they will only sell something which they feel, one, will contribute towards the profitability, two, at the level at which they feel comfortable with. In the case of Allianz, they also see this as a social objective, so they're quite happy to actually aim at the lower return on equity. Now I'm going to talk about this product here. This is not micro Takaful, it's micro insurance. If you go, this Bradesco is actually an insurance company in Brazil. This was actually taken from a presentation 3 years ago from a Munich Re Foundation micro-insurance conference, which I attended in Jakarta. This company basically sells this product. Coverage is accidental death and funeral expenses. The benefits, and this is the kicker if you like, effectively is that, if you die, that's the first option there in terms of the program, 1,135 USD. But you also have a chance to win the lottery, whereby you get $1,135. And the premium includes the price of the lottery. So effectively, it's an incentive, because you think about it, the person who buys the insurance, if he dies, he does not get the benefit from it. In Saudi, for example, they've got this, when they sell life insurance, they sell it to the wives. Because the wives understand, if the husband dies, you lose. The husband doesn't understand that. He says, he goes, he goes. It's the wife who understands the loss, if you like. So you sell to the wives. In this case here, you are trying to sell to the individual, and you have to give him some incentive. And the incentive here is that you might win the lottery. But the fact it's not there anymore in terms of this product means that it wasn't that great an incentive, it seemed. Now I go to Bangladesh. Bangladesh, there is this foundation, Sajeda Foundation. I'll give you the link there. Basically, they are a microfinance institution of 100,000 members, basically for women, if you like. For some reason, microfinance, people trust women to pay their loans better than men. But they have this product. Now, this product, basically, when you take the microfinance loan, you're also given the option. Initially, this product was provided for free, if you like. You get the microfinance, you pay for the loan, and you get this for free. But they found out that effectively, it was not enough to pay the claims, and they want to expand, the coverage. So this product called Nirapota, all right. I'm sure that means something in Bangladeshi language, but effectively, oh yeah, it does. It says the safety net. Nirapota means safety net. So under this program, you also are provided with health insurance cover, of course limited, fire in case your house gets burnt down, of course death. You get some scholarship as well for your kids if they do well at school. They also have a call center whereby if you've got any questions about the cover, you can call them up. But one important service they provide here is actually, because they're primarily for women, they provide these nurses, if you like, going around giving advice, in particular to pregnant women, what steps you should take to ensure that, you have a good pregnancy. So effectively, it's basically a part of a social service, if you like. It's not just primarily for microinsurance. The premiums, when they start charging for it, was from $3 to $13, depending on the amount and term of the loan. So it's an affordable premium. Now, what are the strengths and weaknesses, and what are the lessons learned? I've taken this, by the way, from a book that was recently released called Actuaries in Microinsurance. And there was an article written by this actuary. So I've just basically taken his observation, if you like, in terms of this particular program. Like I said yesterday, in terms of discretionary mutual, there is actually flexibility in claim payments. Normally, when you want to claim, you go to the insurance company, you have to fill out forms, you have to basically give a death certificate. But here, you don't need a death certificate because it's a community. If somebody dies, basically, you know who dies. You don't need any form of proof that the person has died. So you can pay claims faster. And it encompasses the living benefits. So even though you don't claim, you benefit from the services that's provided, by this foundation. So it's not simply just a benefit that you get when you are crying, if you like, because of tears. You are also getting the benefits when you're happy, because it incorporates the health program, scholarship, fire insurance, And what's interesting is that, after this program was introduced, it was observed that there was a big reduction in terms of maternity-related deaths because there's proactive, you got these nurses going around, advising pregnant members that, you should take certain steps to ensure that, your pregnancy is successful. It also benefited from the fact that, it's not subjected to the conditions, because when you buy insurance, there's a policy, all the conditions placed in there. And of course, the margins that the insurance company might demand, because when the premiums are small, in order to pay for the expenses that's incurred, in actually managing the microinsurance program, it's large as a percentage of premium. If you have a $1,000 premium per year, it might be 10% or 5%, 1,005% is $50. But of course, if the policy is only $100 a year, then $50 is half of the premium gone through expenses. It does not work. The other point that he made, because he's an actuary, he's observing that the premium rating was done on an actuarial basis. The people managing the program were professionals, so effectively it worked well. And it's important that you've got this technical expertise in the program, because otherwise there are other programs out there which are not so successful because they over-promise in terms of benefits, and they don't manage their data appropriately. But there is a disadvantage, of course, because you're exposed to concentration risk, because you are in a foundation, your people are limited in a particular place, and effectively, if there are lots of claims because there's epidemic or whatever, you won't be able to pay because of the concentration of the risk. So this is something that he observes, the weakness of this type of program. And of course, there's also the regulator. Whenever you're successful, the regulator will look at you and says, okay, basically maybe is this good or otherwise, in terms of what you're promising to your members. So there's also this concern that down the road the regulators will impose conditions that will make this type of program, not possible. So the observation that we can make from this is that, if members do not make a claim, they still benefit because effectively, there is this program, if you like, that actually provides this service to the individual, all right? So basically, one of the example here, and I think maybe I'm running out of time, I'll go through this quickly. Fondos. This is in Mexico. This is a program whereby you got clusters of growers, of different kind of vegetables or fruits, and they basically self-insure each other. I mean, they know, they basically get together and they self-insure each other against certain risk. Effectively, the law there, because there is actually a law of fund that governs this kind of structures, is limited to agriculture-related losses, but it can also include insurance on the life of the farmer, right? So there's no delineation between life and general here. It's all in one pool. So you got this fondos, which is set up by local growers in many parts of the country. But you also got this integrating agencies, just like yesterday when I talked about discretionary mutuals. You got these management companies, if you like, that manages these mutuals. So in Mexico, they got these integrating agencies which oversees the activities of the fondos. They are the professionals, if you like. They provide the service, if you like. So one IA can be responsible for many fondos. So they set the premium rates, they control they manage the enrollment, they arrange for the reinsurance, training, they settle the claims. So because of the way this is done, it allows scale to be built up very quickly, because as one, you don't replicate that service for each of those fondos. You have one integrating agencies, if you like, and then you replicate that service among various, many, if you like, mutuals. What is also an advantage in this scheme is that the government can then provide subsidy, premium subsidy. And also, so if they say there's an issue with regards to a certain crop, and it's failing, if you like, then the government can say, okay, I'll provide subsidy to that particular fondo, if you like, because that's an important crop. I must make sure that that group of farmers survive. And also, the government is responsible to ensure that there is sufficient reinsurance capacity. If there's no capacity out there, there's no reinsurance companies who's willing to provide the cover, the government will provide the cover. So it provides a government kind of objective. This is the slide here, which gives you indication in terms of how the premium is split. So in this case, for example, 20% goes to the stop loss reinsurance costs, 25% goes to paying for expenses, all the services as provided, and 55% is reserved to pay claims and to build up reserves. Now, if there's no claims, 70% of that 50%, the second table and the second chart there, can actually be used for social purposes. So the surplus, if you like, is given back to that particular fondo to use as they want. All right, so this is something as well. Now, it's a living benefit per se. So the money does not disappear. The money stays within the community. The conclusion then. I think we have to actually accept that the poor have got very little disposable income. For every dollar that they earn, they very reluctantly spend it. So you need to keep that in mind. And, sometimes, and this is something that we observe is a problem for microinsurance, because even you might be able to make or get people to subscribe to the program in the first year, but if they don't make a claim after the first year, you might still be able to persuade them to renew the policy for the second year. But once it comes to the third year, they say, this is not good value for money, because I pay whatever money I have to pay in terms of premium. For 2 years, I get nothing back. So they lapse it. And this is a real problem for microinsurance, micro Takaful. There is also a case whereby, this is in India, real case, basically, Basically, they buy fertilizers, and effectively, when they buy the fertilizer, the provider used to provide a free gift. It could be an umbrella, it could be in a bag, And then 1 year they changed. No more free gifts. I'll give you free personal accident cover. After 2 years, when this was done again, they say, can I have the umbrella? Yeah, because you have to remember, for the poor, it's something tangible. It's money that they want to see, they can feel something that they can actually use. So the second point here is that it goes back to this thing about selling insurance not to the breadwinner but to the wife, you know. If you don't enjoy the benefit, then it's very difficult to sell. So it's important to package the insurance with more tangible benefits, and this will ensure persistency. Third point here is that running micro takaful as a business requires volume and good persistency, something that is very difficult to get in this particular segment of the market for the reasons I mentioned just now. And the fourth point here is going back to the sajeda experience, so that, you know, it would suggest that to have a sustainable micro takaful model, we need to actually use the communal pooling of risk, and then you incorporate on top of that a social objective, so people can see it as a package, because by itself, it is a difficult product to sell. Thank you very much.
Thank you, Zainal, for that interesting presentation. I knew you will rise to the challenge, so I don't have to worry about that. Our final presenter will be Alberto Brugnoni. He has not got a formal presentation, but has left it to me to put any difficult questions which remain. So, Alberto, I think the first question is, you have traveled in many, many countries where there are potentially, or there is potentially large scope for micro takaful. Have you seen anywhere local processes or practices which could be adapted into this kind of thing? You can come.
Iqbal, thank you for putting an impossible to answer question at the end of a two-day demanding meeting. My experience has been in Afghanistan a long time, in Palestine, in Russia, Hijaz, and other Khartoum, some other African countries, and where sometimes you had war zones. To be honest, insurance, for the very reasons that Zainab has highlighted, is not on the mind of people. You know, it's something that is not tangible. And on the top of that, very often you have those, in my opinion, misunderstood Sharia concept that insurance is forbidden, which is of course wrong, but most people are not well educated, and they don't know it, and they think that tawakkul is mandatory in Islam, which is not true, as we know. So my answer is that not really. I never find an area where you can say that there are institutionalized ways of sharing risk. Of course, in most Muslim societies, you have people helping each other. This has to do more with the families and large families, tribes effect, a group of people, but not really thinking about something that is an institution that has to take care of the same issues where insurance is concerned with. Little different is the case of finance. So microfinance, it's certainly there. It's certainly there. Finance, microfinance, Sharia compliant or not Sharia compliant microfinance is certainly there. And most probably the most demanded or more demanded mode of financing is mudaraba. More than murabaha or musharaka, whereas the poor perceives himself as a mudarib and is looking for Rab al-Mal from the other part. So those are the two areas. And certainly if you have a demand or awareness of microfinance, it should be not so difficult to branch out and to create a demand or awareness of micro takaful embedded or linked to microfinance, but is not really happening. You need to create the market and educate people in this direction.
Do you also see, as Zubair has hinted, any role for zakat in?
Certainly. Let me put it that way, the traditional understanding of the use of zakat is challenged more and more by Sharia scholars. They are not challenging the 8 categories stated in the Quran, because this is not challengeable, but the understanding of the 8 layers is certainly challenged. We have a great experience in Sudan, where recently Bank of Khartoum has launched implemented a micro takaful program, whereas zakat is used with certain conditions set out by the ulama to pay for a part of the premium. So certainly, remember that zakat, it's an enormous amount of money in the Muslim world, enormous amount of money, because you're talking about actually a tax of roughly 2.5% on the wealth of people. So you're talking about, nobody knows, but you're talking about what, maybe hundreds of billions of dollars. So to put it to work this amount of money, and to create a virtuous circle that can help improving the macro takaful distribution is certainly worth thinking about. There are doubts about the using of zakat in microfinance, of course, for different reasons, because this is investment. But certainly in macro takaful, this is an area that is opening up right now, certainly. That's all.
Thank you. I just want to end with a few remarks on the structure. I think it is clear that probably to run micro takaful as a business venture would be challenging. However, if I have models of very intelligent understanding of common interest, so one of the models, for example, is the World Bank Group. Some of you will know, but just for recapping, the World Bank is divided into 2 parts. One is called the IBRD, which is the International Bank for Reconstruction and Development, which does normal financing on very keen commercial terms. So for that, the bank borrows on the bond markets and lends out to different countries. The main function of the bank there, of course, is to finance projects which may not have a one-to-one revenue relationship. So, for example, if you finance the building of a road or a telephone system or something, the repayment will come from tax revenues. So it's only the bank which can do that. Commercial private enterprises will not consider that kind of a thing. However, the other part of the bank is called the International Development Association. Now, the International Development Association funds what are considered to be very poor countries. So I think at the moment the threshold is about $500 GDP per capita before you qualify for IDA funds. Now here, and I joke with Sharia scholars often that if you can produce such a loan, then we will all take it. The terms are very simple. 50-year term, 10-year grace, and no interest. Yes? Can you match it? So these are really concessional, heavily concessional funding, but funded by grants from donor countries. So these are not funded from the bond markets. Obviously, you can't borrow it, whatever percent, and lend it on these terms. Now, why do the donor countries want to fund that? They have a rationale that we want to make these countries bankable, and therefore basic infrastructure, basic development of human capabilities, if we fund them, then it sets into motion a virtuous circle in which these countries can grow and graduate out of poverty, right? So if you have good roads, good health facilities, schools, etc., funded, we may get in time a large number of customers for our other services. So for a number of years, we will fund them. And in fact, a couple of countries which have graduated out of this, not a couple, more than 3 or 4, have been experiencing troubles because for the first time they have to pay for whatever else they borrow. So I mean, we have also countries like China, for example. Not long ago, it was one of the IDA recipients, India, Indonesia, and so on. They have all graduated out, and now they are, of course, if they need funding, they will take it on commercial terms. So in the Takaful space as well, and in the Islamic finance space, if we are able to fund microfinance, micro-Takaful possibilities as a gesture of greater public good and as a gesture of creating constituencies which will become clients of Takaful. If I have benefited half my life from micro-Takaful on concessional basis, I am more likely to buy Takaful than if you come to me as a user of conventional insurance in the middle of my life and say, can you switch? And I will ask all kinds of questions, why should I switch? Here I have no questions to ask. I'm very well prepared to do that. So I think we have to work through institutions like the Islamic Development Bank and so on to see if we can create this kind of forward-thinking facilities to empower the constituency for Takaful, for Islamic microfinance, and then for Islamic finance itself. And that is a big challenge. Because if we start to look at commercially viable micro-Takaful operations, I think, as Zainal has also said, even making it, jazzing it up with all kinds of gifts and other structures, those people have not got that much time for this kind of gimmicks. Yeah, they need, every dollar is survival, and they don't need this. But if they can get their act together, and if we can empower microfinance to work better through micro-Takaful, then I think we can see a pathway for these peoples and countries to grow out of it. Just to give you lastly an example that what microfinance itself can do, if you look at the growth rates of Pakistan, Bangladesh, and India, we see that these 3 countries, at the time of the, say 1948, when the 2 of them were made independent, and then 72 when Pakistan and Bangladesh also became separate, the socio-economic conditions are very similar. So effectively, the economic growth rates should not differ greatly. I don't think politically also they are that different, despite the fact that India has been free of military rule for a long time. But I think military rule in the other 2 places has been benign in economic terms, right? In, of course, political terms, it has been costly. But you see that activities of groups like Grameen and BRAC in Bangladesh especially, and similar microfinance institutions in especially South India, we see that the financial inclusion rate in those countries is probably 10 to 15% higher at least, and economic growth rates are probably between 1 and 2% per year higher. So we can see the benefit of this kind of thing happening, And Pakistan is a classic ripe case where I think what Alberto is saying, that zakat would work very well. People, in fact, are not paying zakat, or they're paying it in their own way, because they don't want it to give it to the government. But if they found a way to give it to some place which they can see makes sense to the poor, I don't think there's any shortage of zakat in a country like Pakistan, okay? In Malaysia, for example, when they have introduced this kind of scheme in Selangor Strait and otherwise, the collection of zakat itself has also gone up because people see a direct benefit for their contributions, okay? So I think we need perhaps to devote slightly more effort in our activities to creating this kind of empowering solutions which will create future customers for us. As Akub has been saying, Takaful is a long play, and Takaful itself is a long play. I think there are no short-term solutions here. We need to think long and hard, but once they are embedded, they can last forever. So with that, I'd like to thank our panelists, and we like to come to a close for this summit.